Yo, what up, y'all? This is Ace with at Tlfx. Today we're going to be going over Forex charts. We're going to be doing some charting this morning. Today is the April 27th, it's about 11 a.m. Eastern Time. Enjoying the day today so far. So far, so good. Had a good weekend. Hope you guys had enjoyed your weekend as well. So you can see here that we are currently on the Euro dollar chart on a weekly. I'm actually going to have to take out these... So remember, if you want to take out your positions that are marked on your chart, if you guys trade inside of MetaTrader 4 or 5, at times you'll find that your past trades have been marked on the chart. You can go here, right click on inside of your trade station here down below, and what you would do is your toolbox, you would then right click on just any area here inside of your toolbox, and then you're just going to go up to show on charts and delete all deals, and that'll go ahead and get rid of all of those for you. All right, so let's go ahead and just do these charts. So you can see right now for the past few weeks, 1, 2, 3, 4, 5, 6, 7. The last 7 weeks we found ourselves in a very choppy market. We've had back-to-back bear, bull, bear, then slight bull. Now we're starting to get into some sort of normal price action. Obviously, these came around the time that we started to get hit heavy with the coronavirus news. So we can see how the market reacted to that. At times, the dollar found itself weak, and at times, the euro found itself weak, and just been going back and forth to try to find some sort of equilibrium again. But we can see in the general trend, we are bearish on the weekly. So we will continue to look for possible bearish entries in the greater scheme of things. We know that our bearish entries, as long as the market is generally in a bearish trend, that we are in a good position to benefit profit-wise on such trades, right? The trend is your friend, as they say. So let's go ahead and just mark some levels here on the weekly. We're just going to mark. This is a supply zone here. And you know our supply zones we mark in blue, because when we're trading bullish, we trade blue for bull. So we're marking bullish there. I'm actually going to take out this. I don't necessarily need that trend line yet. Not a trend line, actually, a horizontal trend line, okay? I don't want to confuse it. And so this horizontal line here for red, we are going to use to mark our demand zone here on the weekly. There we go. And so this is our low that stands out the most, and this is our high that stands out the most as far as current price action. You can see that we are between these two zones, our demand zone and our supply zone. And so we're just going to keep it simple, guys. We're going to move and take a look at if there's any areas that we can find for reversal. We can see that it's kind of tight, but this area here may serve as some sort of reversal, even though it's been broken once, twice, three, four times on a weekly. So actually, let's go down and drill down a little bit. So we're going to drill down to the daily. We can see that our extremes that we have marked for our supply zone up above and our demand zone below, we can tighten those up a little bit, because you can see that we have some clear levels, resistance levels here for our supply, and a clear support level here on the daily for our demand zone. So we'll just tighten it up a little bit, making it just a little bit more clear as we start to go down into our time frames. We want to be able to at least have a little bit more precise areas that we want to pay attention to. And as a part of what we're looking at here on the daily, some other areas that we should pay attention to are this one here. This is a low that stands out on the daily. Again, we're going to mark that in a red. We can mark this one in a darker red as well. Our lighter reds we can reserve for our smaller time frames on the charts that we may actually take the trades on. So we just keep these darker tones for the larger time frames. Okay, so we're going to go ahead and mark this high here as well. And this high signifies where we see a level where the bulls were able to reach, but the bears immediately pressed down and rejected this price point. So we are going to mark that in the bullish color for a break above. In case the market comes to it, and you can see that those lines that we just placed created some sort of zone here that we're playing, price action is playing in between now here on the daily. You can see that we have a pullback from this area here. We had bearish motion give us a price to this point, and then bulls came in and took over and gave us a huge pullback on this down move here, on this single candle, and then continued to go up and found itself a high here. So as a part of what we find in downtrends, again, because we're looking for because we are in a general downtrend on the weekly, we're looking for lower highs and lower lows. Now, this is a lower low than this, so hopefully we may find ourselves just pushing up above, creating a lower high, and then giving us some momentum to reach this low again. If we can break through this low, of course, then we'll be looking for more and more sells from this. So you can see we have the 8-day in red and the 21-day in, excuse me, this is the 55 and the 35. I'm actually going to change these around. So let me go ahead and I'm going to make these shorter time frames. We're going to keep the 8 in red and we're going to do the 21 in blue. I have a 55 and a 35, and all of these numbers are actually numbers that are fib numbers, Fibonacci numbers. Of course, because we trade Fibonacci heavily in candlestick charting, we like Fibonacci numbers. Those numbers work really well. So you can see that the cross of the 21 above the 8 signifies down pressure. And we can see if you had entered on the cross, you would be up right now, and you actually were able to generate some pips out of that if you simply enter on a cross. Now, I'm not advising anyone to enter on a cross of any moving average. It is quite risky. It's not advisable. So I would recommend, not doing that unless you have confluence of other confirmation signals showing you that you actually are moving in a bearish fashion. So let's go ahead and just measure how many pips you would have gotten if you would have confirmed that this is a downtrend. These two candles, you have a bullish candle with and right after it you have pressure down. You have to open up this red candle, become so small, almost close to a doji. That gives you that tells you that there's some sell pressure off of this buys here. So if you were to enter on the next candle here, it's a risky trade. Just saying, if you were to enter there, you would have got yourself 80 pips out of that deal, close to 100 pips out of that, just trading across and a couple other confirming signals. But just want to point that out. So we got that there, and obviously you can see if we were to change it back to what I had it before, it's a 55-day and a 35-day. You can see that there is still sell pressure on the market right now, and you have a cross here that's occurring currently as far as the higher time frame moving average above the lower time frame gives you an idea of continuous bearish pressure. So just keep an eye on that as you're looking for entries on sells. But I'm looking really for a break below these lows here, because we want to create a lower low and then retest this low and to create a lower high, and then continuously seeing some push further south. If we actually see that happen where this low becomes a new high and we enter the market, it's 117 pip potential there. And on the flip side of that, though, we also have about a 90 pip stop loss that we have to take into consideration. So it may or may not be worth it. Obviously, we are on a daily time frame. You have much larger take profits and stop losses, but this just gives us an idea of where we're going. All right, so if we narrow it down a little bit, we can see that we are still inside of that zone currently on the 4-hour. We can tighten up our lines just a little bit here. We can see that a new low was created here on the 4-hour that kind of that just went a little bit lower than this one here, even though it still creates somewhat of a zone. So we can mark this out as a zone actually. Mark this area here. This is a potential zone, and of course we're going to mark it for bearish pressure. So we're going to give it a red tint. Okay, and let's just see how many pips this zone is. I don't like really wide pips. Somewhere in between 20 pips, 10 and 20 pips is fine. All right, that's why 16 pips are worth of a zone. which is going to include this low here and this low here as well. All right, so that's decent. All right, phone's going off, y'all. There's a lot going on today. All right, so what we see now, what we see happening here is we're having a rejection off of this 55 moving average right now here on the 4 hour. So again, that signifies more sell pressure, and you can see that we've hit these highs here. We've had trouble getting through them. If you look at this zone here, look at that. So it still had some room to climb to get there. It still had some room to climb to get there, but it was a rejection zone. I'm actually marking for bear because of this here. It's actually you have highs here that you're gonna try to break above. So you actually mark those with the bear just to show. And I have difficulty selecting this here, so let's go ahead and move that down just a little bit. So it's going to include all the tops and some of the wicks, but it got close enough. Obviously, we have another area for it to bounce off of, which is a 55 moving average, and we start to see some bearish pressure continue. So let's see a break below here, guys. So we're going to go ahead and put some. Let's see how long does it have to go before it gets there. That's about a 76 pip move that it has to get. And it's confirming now on a 4 hour, it's confirming for sales. Because if we go down and narrow down all the way to the 1 hour now, we can see that we're getting this heavy bearish pressure right now. However, we do have our moving averages below. But again, these moving averages, they hold more weight on a higher time frame because they're close to the higher time frames are more relative to these moving averages of candles for daily candles. All right, so obviously this will be a little bit this is a bit tighter here because we're dealing with the daily. Right? So look at that pressure that we have here. We do have somewhat of some wick action happening here on this pin bar, as they call it. So if you look at the 8 hour, you can see we're still getting close, and we also have this pressure now with the moving averages touching each other. So this may want to come up and just tap again. But from right now, what I see, this is a potential sell trade. If you narrow down, and you don't have to analyze so many smaller time frames. Obviously, you did the greater analysis by looking at the larger time frame. Smaller time frames can fool you sometimes. At times, you might want to look for breakouts below certain levels, obviously certain lows. This is a 30-minute. We are sitting on top of a rejection point here on the 30-minute. So if you were trading the 30-minute chart, you might actually wait for some more confirmation and break a little bit further below this area here. Okay, but it's not. This is what happens when you're looking at multiple time frames. Again, you have some room to push down, even to here, which will give you. The mouse just keeps tripping out. That's about 7 pips. That's not much. That's not much further away from here. So it's about 10 pips away from this potential rejection zone. But you're really looking at a reversal off of this peak. So again, this is showing you that we're in an uptrend. We're coming off of a downtrend. Now we're in an uptrend here on the smaller time frame. And on the 4 hour, we can see that we are, yes, we're just now going back into the impulsive side of this downtrend, coming away from the retracement. So now we're back into the impulsive retracement, impulsive. Well, it's actually going this. This is impulsive retracement, impulsive. All right, and now you have impulsive retracement, impulsive retracement, impulsive retracement, impulsive retracement, impulsive retracement, and now we're back to repulsive. I hope you guys followed that, right? Impulsive, excuse me. So this is also creating what we call a evening star, you have two bulls. It doesn't matter what the color of this candle is. However, it's showing that we do have some bearish pressure. So it may, let's see what the risk reward would be. If we were to take this trade, our stop loss would have to be above this area here. It's about a 30 pips stop loss. That's not bad. That's not bad to risk in turn for a 30 pip stop loss in turn for a 60 pip risk. That's a 2-to-1 risk. So I'm actually going to take this trade, guys. We're going to go ahead and enter this trade. We're going to enter on one lot, and we are going to enter a sell. Okay, and I'm going to put my stop loss, as we just mentioned. You marked our stop loss to above here. In fact, if I wanted, I can put it up even a little bit further. Move it up to above this zone here, which would be about a 50 pip stop loss. And then I can have my my take profit can now be somewhere here, because I'm expecting, obviously to cover again at least this this candlestick here. So we're at about 75 pips. Okay, so we're gonna leave that, and I'm just gonna draw out what we were looking at. We entered the trade here on this candle, and we are trading it down to this level here. We are going to change the color of this to green. Green meaning that we are in profit. It'll give us a little bit of a different background color. And then we also have to draw from our stop loss area, which is here. We are currently on the same candle. Our stop loss is in that area there. And we're just going to extend this out here to here, to our entry, and we are going to change the color to pink to signify where we would be going against what it is that we're actually looking for out of this trade. All right, so we're just gonna let that ride. We are currently down about 1 pip or 2 pips. It's about the spread. The spread is less than that, actually. The spread is about a 1/3 of a pip. So it's currently pulling back away from this level, which we did kind of see happening on a 30-minute chart. So we do have to just be aware of that. Sometimes you will get pullback. And in fact, something that we may want to consider is if we do get a pullback all the way back above, back to this area here, and then get a bounce off of it, then we can actually re-enter the trade after we reevaluate. But for right now, we're just going to leave the trade in as it is, and we're just going to let it play out. I actually want this to be a little bit lighter, guys. I'm sorry, we're going to change this again. It's a little too dark. It needs to be something like that there. All right, so let's just see how this trade plays out. And if you want, you can go down to a smaller time frame, and you can just see in larger terms where we are with this trade, and we currently are up on this trade. All right, so let's go ahead and let's let this thing play out, and we'll see what happens with this. All right, if there's anything that we want to keep an eye on, as far as maybe let's see what happens when it gets down to this area here, where again this wave of this up move. We'll continue to just set a little bit of alerts there, and we'll just wait for that thing to play out. Okay? It's simple trading. All right, so let's go ahead and what I wanted to do as well is on our 4-hour chart, something that we have to keep in mind is this here, is that we have a trend line break on an inner trend line, to break low. Not a lot of pips to have to be had there, but we gotta keep an eye on that. Whew, that's tight. Oh, this is the type of thing that happens, guys. this is the type of thing that happens. What we have to do is, if we take a look at that there. Now this is just forcing something, right? This is what it looks like when you're just trying to force something in your favor. You're like, man, this gotta be a line right here. This is a trend line right here. This is, it's only hitting one, guy. You're gonna go a little bit lower, you'll find that, you know, you're not really making an argument for yourself there. You can get in there a little bit, and you can see that, yeah, you're getting some action there. Okay, you're getting some action there. All right, so hey, that works for me too. Let's go ahead and let this thing play. We'll see. Let it play. Let it play. All right, so this is the euro dollar. We're currently in a sell on the euro dollar. Pushing down to this level here, and potentially get down into this zone. Once we get here, then we can reevaluate and see what we do at that point. Okay. Beautiful. All right. Let's move on to the next, guys. So this is New Zealand USD. We're currently on the weekly chart. I'm going to go ahead and go and select all of these objects. Okay, and we're just going to go through and just get rid of all that. Bang, bang. Simple and plain, so we can start a little fresh. Okay. Currently in the general, this was a ranging market, and we start to see some highs, low, lower high, lower low, lower high, lower low. Might be creating a lower high right now, or potential push further bearish. Okay, so let's just keep that in mind. And again, we're going to mark on our levels here on the weekly chart. This is our lowest level here, so we're going to mark that in a dark red for bear. Okay, and then we're also going to go. This is okay. This might be a little bit more significant on the daily, so we'll leave that for the daily. However, we're going to look at this area here as an area for reversal. We have to keep this in mind. Old floors become new ceilings, so if the market wants to continue to go up here to make its lower high here, it may just do so. Currently, we are in a bullish price action. Current candlestick on a weekly. So let's go ahead and we have this low mark, and then we're going to go ahead and just mark this high right here. That'll be our 3 levels that we'll just leave marked on our weekly. Why don't we mark these? Because we're so far away from price on those. It makes no sense to cloud our chart with unnecessary lines at the moment. Okay, so we're just going to keep this real simple. So this is what our weekly looks like. So let's go into our daily, and we'll see that on the daily. You have our zone still hold pretty well, especially our demand zone down here. We can tighten that up just a little bit, and that's fine. And as well as our supply zone held up pretty well, we can tighten that up a little bit as well. We can see that this reversal area, it's a big gap between these 2 candles. So this reversal area is actually represented by the gap between the close of this candle and the open of this one. And this is an area that we may find some friction in. Okay, and why is that important? Because as you can see in the past, we've had a similar experience. Just gotta make it a little bit darker, like that. Perfect. Okay. All right, so we'll just keep an eye on that. Now, here's what happens. Now, as you look back a little bit, you see that this area was tested, and then we got a rejection off of it. Okay. So this is a significant area. Now that we have floors here, so now we can make new ceilings out of it. Let's keep that in mind. We currently have a low, a high, a higher low, a higher high, a higher low. We may be pushing to create a higher high somewhere around this area. So let's just keep that in mind. Is that going against the general trend? Yes, it's going in favor of the smaller trend here. We can say if we have 2 points of support and resistance inside of a trend, technically we can consider it to be so, especially in a larger time frame. So we could say 1 point for low, 1 point for high, second point for a higher low, second point for a higher high. Those points already are giving us an idea that we are currently inside of a small uptrend, possibly to this area here, just to get a reversal off of it. So we may wait till the market gets to this area. So let's just do this. If we're waiting for the market to get to this area, what we're going to do is it's going to put us an alert there. It has to hit these alerts in order to get to that point. And of course, it may not always hit exactly at that level. So we'll put our alerts a little bit lower. So it gives us some room to catch it in time. Okay, let's just put a couple more. All right, why do I put so many? Well, it's from what you'll realize that you might not catch all alerts, especially if your volume is low or whatever the case is. But sometimes if you're on point, you may hear it. If you're not on point, it may take a little while for you to actually get the signal. So I'll put a few of them in there, so that you're alarmed about it when it does happen for you. Okay, so let's take a look at keep an eye on that. Now, there's a potential that this can be the high that it wanted to create to go on down and create a higher low, or excuse me, a lower low beyond this low here. So we can go ahead and put an alert here as well, and that'll give us an idea if this low is broken. If these lows here are broken, then that means that we may be creating lower lows, also lower highs, to continue along in the bearish trend that we were already in on the bigger time frame. So go ahead and make that adjustment there. Put the alerts, so we have our alerts in place. So we're just going to keep it real simple on this, guys. We're not going to make these charts complicated. We can go ahead and we can see that if we draw a trend line, that we may be able to trap price a little bit. Here on the daily, this is a decent trend line that we have there. If we go down to the 4 hour, we may be able to find a little bit more opportunities for trend lines. But our levels that we have marked are pretty solid. See what you see here on our 4 hour chart is that we have a ranging market in the last couple of days. But what we can do is we can go ahead, of course, and just mark our trend line and just show there's an outer trend line. And that just gives you just a general idea where we are with things. Okay, make this one. Okay, just a general idea, not too complicated. We're gonna keep it real simple. All right, let's keep it as simple as we can. So we have that there, and then we can draw just a kind of tighten this up a little bit with an inner trend line. That'll hit these guys right here. And in fact, I kind of want a few more points of contact. So if I run it between 1, 2, 3 points of contact, a break above and a retest may signify to us that we are actually pushing above and trying to push towards this level here. Now, if you were trading this 4 hour chart or a smaller time frame, it might be impetus on you to take a look at actually entering and engaging in a trade on this particular chart right now, okay? Because you're finding yourself at a reversal point based on a trend line reversal. You have a break above, a retest of it. It may give you the momentum that you need to get up here, as well as bouncing now off of this, which is a high. It's been broken once, twice, 3, 4, now 5 times. It's being retested. All points in the market may be significant, may be insignificant. It all matters on how many points of interaction based on price do you have where the market stops at that area and plays around a little bit. It didn't stop at this area too often to play around with it, aside from one. Well, no, it did actually. 1, 2, 3, 4. Okay, so this is the point that we have to keep into consideration, guys. Either for a continuous motion down and continue going down, or it may be a point of reversal for us to go up. So we're just going to keep an eye on that. Let's make sure that we have our alert set, and we're just going to keep it moving. So now here we are on the dollar yen. We're going to go up to the weekly. Okay, choppy market, guys. Choppy market. Look at this. This is ugly. This is ugly. Now, if I do one down to the daily, will it be the same? Let's see. Wow, choppy. This is more defined. This is up, down, up, down. Now this is, you don't know what this is doing right here. So here's what we do. We simply mark and track this with horizontal lines. This low is obviously an area that has been having some struggles getting through. So we're going to mark that area there. And we are going to mark this upper area here in the dark blue, because this is an area that has found some highs and some wickage going on there. And if it breaks above or below is when we will start to take a look at what we can possibly do with the market at that point in time. So we're not going to force anything. We're not going to try to uncover some hidden gems that are not there. We are going to be smart about what we do, and we're not going to waste our time with trades that may not be the most profitable trades or the most promising trades, okay? Again, we can't predict what happens in the market, but we can read these candlesticks and will give us an idea of what high probabilities of where the market may go. So if it's choppy, we kind of stay away from it because it's hard to go ahead and try to pull a probability of one direction or another. We'll keep that simple. All right, so here we are on our Audi Chef. Let's go up to the weekly chart to see where we are starting out. And we are going to go and get our object list, and we are going to erase every single object that we have. And we're going to start from fresh, new week. Okay, obviously, some of those levels still hold value, but again, what's happened in the past has been revisited in the current. So what we see in the current, or we can mark on the current, is also going to signify what may have also happened in the past. All right, so we're going to keep it real simple today. We're going to just start on our weekly chart. We are going to mark, if you see here, this is a gap that occurred in the chart. All gaps have to be filled. So we may see this open and close of this candle. We may stay in this area, continue going bullish to go close this gap up here. There's another one that needs to be closed. Okay, and then there's another one that needs to be closed up here. This is very interesting that you see these gaps, which means heavy bearish pressure. But of course, as you find demand zones, all these orders get filled and things start to come back again. So let's go ahead and mark this demand zone here. And that is a tight one that we have here. Let's go ahead and mark a reversal area for ourselves here, which can be signified by this line here. And then we can also take a look at breaks above these levels here. Okay, and then we go ahead and we just mark that in the dark blue. We'll keep it real simple, guys. So here's what our weekly chart looks like. We have a gap that is currently being filled. We are in a down trend. So we're looking for possible entries or reversals here if possible. So let's go ahead and set some alerts. That's a long way to go to get there. Obviously, on a larger time frame, the distance between one point to another is more pips. Okay, so we can see even if we try to measure, we can see where we are with this, and we are interesting. Let's see. We would make a wager. I would say about 50 pips. 126. Wrong, and I lost the bet. Huh? So what was the bet? I don't know. We didn't bet. Cool. All right, so here's where we are with that. So we're about 100 something pips away. So if you're a swing trader, you're looking at this trend as a current uptrend. Again, in the greater scheme of things, this is just a retracement off of an impulsive move, right? For the general traders, we trade the impulsive moves, which means we trade it at the turn of a retracement, which is this here. We never know where this is going to turn. It may very well just want to turn here as it's closed up the gap. It may want to turn halfway above. We don't know. Okay, that's the risk of trading against the trend. Is that there's a high probability that the high that it wants to create, the lower high that it wants to create, can be anywhere below this high. It can create it up here. It can create it where it is now. Okay. You have to keep that in mind. However, when we get to this area here, we start to see some signals for a reversal, then we know we're currently still in our bearish. We're pulling off of a reversal point. Our old floor is becoming a new ceiling. That gives us more and more confirmation that we are actually heading down, and we can pull out way more pips out of that securely, being that we're a lot closer to our point where if we get a break above, our stop loss will be less than what it would be trading sells from here. So we just kind of want to play it a little smart, okay? We're going to play it smart. So let's go ahead and go narrow down to the daily. Let's see where we are on the daily. We can see that our zone fits very, very well here as far as our reversal. It fits well here above our, this is a nice point here as well. So we can see that the zone between here and there is pretty tight. So we can leave our line here. We can tighten this one up though. If you look at what happened with price here, we have this pin bar with this huge wick. So that means this is a crazy zone to trade. So that means that if we get a reversal around here, this would be the perfect place to trade to. And that's several hundred pips. So we're talking about these kind of trades, guys. These trades are the kind of, this is like an 800 pip. This is over, may take weeks to get here, but, a couple of weeks to get here. But, look at that kind of trade. You could imagine if you have a one lot size, that's $8,000. That's $8,000 in one trade that may have taken you just a week or so to get to. This is a daily, right? So this is a couple of weeks worth of information here. To get from here to here was 7,000 pips. That means that, you had the opportunity of, on one standard lot, pulling in $7,000. But of course, with some of the techniques that we're going to learn as we grow is, cost averaging and actually being able to increase your profit and still maintain your margin by just adding more and more trades into the mix. All right, so that's just one of the ways that we're able to, really maximize our profits with trades. And we'll learn that as we get into the advanced sections of some of what you're going to learn here with Tlfx. Our trade's currently down. We were up about 8 pips earlier. Now we're down 6 pips. We'll keep an eye on that. We can see that there's some action going on now in the market. Things are starting to move a little bit, and we're seeing this climb. You see that climb? We may see ourselves very well come up to this area, or maybe we just want to touch this level here, which we can signify just as a point that it might just want to come to. I'm just going to make that a little bit lighter as far as the blue, and to just signify it's just a smaller time frame. And so we may be looking at just a touch to here. So let's just see. We're just going to wait it out. All right, so if we get above here, we're going to have to set our alert. Set an alert for above that line. I can unselect this and then go ahead and set this alert. Okay, see what happens with price around that point. All right, so that's a nice, beautiful chart right there. We can just see what happens with reversals in these areas. So as far as trend lines, obviously a trend line from here to here will span on the wider side. A trend line from here to here will actually cut through to show that we will break above for continuous motion, continuous bullish motion. Okay, so we'll keep that with Dr. Blue, and we'll put that, I hate to call that Brooklyn Blue. Dodgers originally from Brooklyn, right? Brooklyn Blue. I like that one. As you guys know, I am from Brooklyn, New York, so we have a lot of pride in some of the places that we come from. I know you guys do too. All right, so we can see that we're pushing to this area. We might very well see our reversal happen at this point here. All right, so keep that in mind. This, along with this, is signifying a strong point that we may find some friction and some pullback away from. If we get a break above, then we're looking at this here. If not, then we're looking at, now we can start to consider our sell. So if you go over here to the 4 hour and we look at where we are, we can see that we are pretty, this is a general uptrend on our 4 hour. We'd be looking at buys currently, but because we're coming up against this, see, that's why we have to look at our larger charts. Because if you weren't looking at your larger chart and you were only on your 4 hour, if you didn't zoom out and you just saw this move happen and you would have said, oh my goodness, I need to get in on these buys. This is crazy. Yes, you would have made money if you got in on buys. This is an uptrend. So you have, your resistance here, you draw your line and you see support was made here and you continue going to buy. You know what I mean? But you just never know where the reversal is going to occur, especially if we were to do this. If we look back and we were to look at the beginning, so you have some range in market, and at this point here is where we found our major drop, right? If we go and we trace a fib from our high here, I need this to pull. Okay, there we go. All right, we're pulling above the 618, which is interesting because the 618 signifies a heavy area. The 50 and 618 signifies a heavy area. So this, because of this pullback here showing such heavy buy pressure, this pin bar creating a bull pin bar. This may actually, if we get some breaks, we actually may see this becoming an actual turnaround for continuation up above the very beginning of this move. So we may see some pullback here. We may find ourselves creating a break above this and a pullback to it. And then in order to continue to push, so we're going to have to keep an eye on this here. This is very interesting. Again, guys, the downtrend is not always going to stay a downtrend, even though it is a downtrend on a larger time frame. It won't always stay so, because this downtrend wasn't always a downtrend. However, we do see an extended downtrend on this Audi chef right now. Extended downtrend. You can see that we've had downtrends in the push above, but just to continue to push. And look at this crazy push, but then, man, the bears are heavy on this. So we're coming up against, these very strong areas. My chart's just tripped out. Look at that. All right. We're coming up against these very strong areas right here. Okay, 1, 2, and you can see all the way back that you have, some price testing with pullback. Oh, this is like a 500 wick pullback. 500 pip pullback just on a weekly chart, right? Crazy, but this still continued, broke below, and then came and then it broke. So we may be looking for some reversals, man. So just gotta keep an eye on that, and we'll see, where we are. Because if I draw a fib from here, from up here, the very peak, okay, then that may change our outlook to be able to see that we actually may be on the 50% towards the 50 versus already being past it. All right, so we got to keep that in mind too, as a possibility, because it depends on where you draw your trend lines, your fibs, or what have you, will determine what you see. So where were we? We were somewhere here with that. Okay. All right. So with the fib signifying that you see the very peak here as far as being a flattened out spot, and then we start to have the drop below that, and we start to really see. So this was a ranging market. We have low, then we have a high, then we have a higher low and a higher high. It's an uptrend as you have higher highs and higher lows. But then we broke below this low and created this low, and this high stayed about equidistant, equally as high as this. And then we started finding ourselves creating the lower highs at this point, which signified this continuation of a downtrend. So we have lower highs, lower lows, so lower high, lower low, lower high, lower low, boom, 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 keep going all the way down. So we have our lowest low here, and now we're maybe looking to create another lower high, or breaking completely through this and it's going bearish. Going bullish. We don't know, so let's wait for the market to tell us. All right, so I'm just going to keep an eye on that. As we were back on the 4 hour, we can see that we are testing this trend line currently, which was drawn on the daily chart. Okay, and this area is here. Okay, so we're just going to keep it. We're going to keep an eye on the Audi chef. All right. So here we go with the dollar chef right now. Currently, the dollar chef. Let's go over to the weekly chart. Very choppy. If we go to the daily, I'm going to erase these if we need to, guys, because I know we have a lot on the chart right now. This is signifying that we are in a ranging market right now. So if I go ahead and I go here, I'm just going to start to take all of this stuff out because this is getting very crowded. Those lines most likely came from smaller time frames, the hour chart, 30-minute chart, 15-minute chart, etc. We're just doing some charting on those time frames. But I'm going to be focused more so on these larger time frames because I want you guys who are learning to understand that these larger time frames hold the greatest stories of the market. The smaller time frames, you just want those to be in correlation with what you're seeing on a larger time frame to justify entering in any particular direction on a smaller time frame. Okay, you want to make sure that you are looking at your higher time frames. Do not make the mistake and think that an hourly time frame is the highest time frame you need to be looking at when you're trading a 15-minute chart. Unless you're just a scalper who's looking to scalp 20 pips at a time, that works perfectly. 50 pips maybe. But if you're looking at generally making very, very smart, wise decisions about long-term trades that are very highly, highly profitable with a minimal amount of risk that you can actually double and triple up on, as far as seeing that the market has the potential to go for 300 pips, and every 100 pip level that you hit, you're increasing your lot size, or every 50 pip level that you hit, you're increasing your lot size and moving your stop loss into profit. You can realize that you can actually reduce the amount of exposure in the market, reduce your losses in the market, reduce the amount of time that you're spending in the market, and actually recouping a lot more in return than what a normal scalper or maybe even a quick swing trader might do. So keep that in mind, guys. Larger time frames save accounts. All right. Larger time frames save accounts. So we just went ahead and marked out our daily trend lines on the upper side as well as the lower side. We have our trend line showing here that we are tapping along this. From this, based on what we're seeing on this trend line here, we are currently inside of this ranging market, because you have a low and a high, but then you have a higher low but a lower high. So that means that we're now consolidating into the zone. So if we just mark out these zones that we're now consolidating into, you have this first one here, which is we're going to mark for bear, and then we have another one which we can see right here, which has been tapped already. In fact, it has been visited and was rejected from that level. So this may be a potential rejection level for the market, as we see here. There is a gap here as far as bullish pressure, so the sells want to come in maybe over the weekend. We had some, after hours trading that kind of pushed the market a little bit lower, but the bulls came in and came right back. If this creates a support area waiting on another, we're on a daily chart right now. We're waiting on another candle to create maybe tomorrow. Not maybe, but yes, tomorrow. Then we may be looking at this becoming the new high and actually us pushing towards another low. But again, this is a ranging market. Just keep in mind that we are trading between these zones here. We may trade as sells to go back here and then trade buys to go up until the market gives us a breakout in either direction. So on the flip side of that, we do have to mark this level here, and then mark this level here. And we're so far away from it, but it's right in front of us. Why not mark that? Breaks above this level here, get us to here. Breaks below here, get us to here, and so on. Okay, so we can just look at trades inside of this zone. All right, that's on the dollar chef. Here we are on the Audi CAD. Let's go to the weekly on the Audi CAD. We can see where we are on the Audi CAD. Okay, let's go ahead and we can see that we are currently in a general downtrend, but we have a large retracement back to the former high. If we have a test onto this 1-2 level here on a weekly, then we may look at reversals. Okay, so before I do that, in fact, I'm going to get rid of everything that's on this chart because it is in the way. So let's go ahead and get that knocked out. Boom, 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 boom. Perfect. And now we are looking at possibly go ahead and knocking that and putting that as a high. Okay, that is an area that we have to pay attention to because this market might just want to reverse here. Here's why. If you look to the left, If you look to the left in yeah, all right, so let's start here. So you have resistance, resistance, resistance. Three resistances tapped it and could not get past it. Came all the way down, created crazy bullish pressure, maybe to get enough momentum to push through. But here's what we have to look at. Why did it reject here? Because old floors become new ceilings. This floor here is showing us rejection at that level. And if we continue to go left, I'm sure we will find another floor close. And here's one right here, okay? And here's another one right here, at least in the same area, for the most part. And here's where we have the break. Okay, so here's where it was less significant. But as with time went on, we find that this area is a significant area, so we have to keep in mind, keep an eye on this area as a potential reversal. But before we leave here, let's finish marking up our weekly. Okay. Let's continue marking up our weekly. So we're just gonna mark up this low here. That's a low of ours that we just want to keep an eye on. Okay. And then we can also maybe potentially get a trend. Let's get a look at that right there. Broke right through it. Hey, with these type of things, you can see a break. Maybe you're retesting and continue to push to get a little bit, get a higher high. But again, we're in a general downtrend here on the weekly. So let's keep that in mind as we move along. Okay, you got to keep that in mind. You don't want to run the risk of thinking that we now are reversing into an uptrend, like people may have thought that there was happening here, because we broke above this resistance and then just reverse. This support and just reverse off of this line, right? We broke above it a little bit, but as we broke below and we tested it, and look what happened, and the market just tanked, right? So it's the same thing. We may find ourselves reversing here, even though this trend line is broken. Because I could draw a trend line from here to here and show that it's been broken, okay? Such as this, right? I can draw a trend line from here to here and show that, hey, it was broken here, so maybe we should be looking at buys now that the market is reversing. No, that's just not how it works all the time, okay? So we have to keep that in mind, that we should consider these horizontal lines to have a little bit more significance in the market. All right, so let's just keep that in mind as we move along. Let's definitely make sure that we are looking at reversals off of this area here. So we will be looking for sell signals. And with this market right now, if we can get some sort of pullback, we could sell back to the trend line. That's a potential right there to sell back to the trend line. That's 100 pips. Okay, so that's possible to do so. All right, we can play it like that. All right, so let's just keep an eye on that. That's a potential sell trade that we can engage in on the Audi CAD. All right, so what I'm going to do is I'm just going to set my alerts. Set 2 alerts up here, and I'm going to set 2 alerts right below, and let's see what the market did. And then I'm going to set 2 below the trend line as well. Okay, I'm just going to keep that simple. Below the trend line here. Boom, boom, boom. Alright, we're just going to pull that down. Perfect. Alright, so we have that marked out. So let's move on to the next. We're at the Euro Audi right now. Let's go to the weekly on the Euro Audi. We are technically, right now, we are in a general uptrend. However, the last couple of weeks, we've been seeing a huge downtrend. However, let's keep an eye on this area here as a potential area for reversal, because we can see that we have resistance levels in this area right here. We may be wanting to trade down to that resistance. So with that there, we're going to go ahead and take that out. So we don't need any of these anymore. The market has blown through these and has made these prices past old news, past history. All right, so we're going to look at this area here. We can zoom in a little bit, absolutely. Let's go ahead and zoom in. Let's go ahead and knock this one out here as well. We don't need this trend line. Let's go ahead and knock that out. So here we are. We're finding ourselves. We have this uptrend here, but we do have this crazy push and this crazy pullback. It's a several hundred pip pullback. Maybe it's not several, maybe just a couple. Let's see. Excuse me. Okay, this pullback here is 1,361 pips. So that is a several hundred pip pullback on a weekly candle. That means that we are currently pushing towards this level here, potentially for a reversal. So we're just going to go ahead and put some alerts here. And I'm doing this prematurely. As we are gonna narrow down to the 1 day to see where we are. So this is where the reversal could potentially occur. We got 1, 2, 3 areas of contact. 4. Yeah, so that means that we are in the area now. We have to pay attention to as far as reversals. Now, it may be a reversal, but again, keep in mind, guys, that this is a high that hasn't been seen in a very long time, probably. Even if we go to the monthly, you can see that the area that we are in now. Well, sorry, it is. We have been in this area here before. Okay, I'm not mad at that. We've been in this territory before, and this is creating this price action here. This is interesting. So maybe needing to go to pull back or just want to continue pushing south. This is a very, very interesting chart right here. Look at this beauty. Oh my gosh, how many pips did you get off of this? See, this is why when you trade these larger charts, guys, you start to see this action pulling on a weekly, and you start looking for sells on your smaller time frames in this area here. And if you got lucky enough to get in anywhere around here, and not lucky, but if you were in you're talking $83,000 worth of a move in a matter of this is months in a matter of a couple of years, maybe 2 or 3 years, $83,000 in one trading pair. $83,000, so we're on a monthly, right? So you talk every 12 candles, so we have about maybe 36 candles. That's about 3 years worth of trading. That's 83,000 on one pair. Profits, baby, profits. Ooh wee. All right, so what are we seeing now? We're seeing this huge pullback. We're seeing this area for reversal here. We need to see either a bouncing confirmation that we're going to continue going bullish, or we need to start seeing some breakouts and confirmation that we're going to be going bearish. We're not going to force anything. We'll let the market tell us exactly what it is that it wants to do. Excuse me. So we can see here that this low has been broken. It hasn't been closed and open to close below low, but our daily chart is showing us that our levels on the weekly, as far as our resistance levels here, still hold strong. If we go to the 4 hour, yes, you guys see the 8 hour, you may wonder why I have the 8 hour there. I use the 8 hour absolutely if I'm trading the 4 hour chart. If I'm trading the 1 hour chart, I won't use the 8 hour. I'll go from the weekly to the daily to the 4, and then put my trade entries on the 1 hour. If I'm trading a 4 hour chart, I'll go from the weekly to daily to 8 hour and put my entries on the 4 hour. As you can see with the 8 hour, we just have a little bit, we just have some room we can kind of play with. Just extends what we're seeing just a little bit from what we have on the daily. Just so the support level still stays the same. This resistance still stays the same. This gives us a couple of more candles just to take a look at and see what really happened, right? What signals did we gather here to really show us that we were going bullish? All right, so you can see this is a nice area, clean cut through, never really returned to it. So as we see former floors becoming, former ceilings becoming new floors, this hasn't become a new floor yet. So we may be looking at potentially trading down to here to hit this new floor with the break below this support. We get the break and the open and close below this support right here. With this potential next candle in the next 8 hours or so, we can possibly look at something going on there, right? 4 hours, 4 hour chart, we can see that the same thing. We are pushing right below it. Potential to go south to the to the resistance zone would be about 160 pips. All right, so we could be looking for confirmation to go in that direction, to keep going bearish. This is a bearish trend on the 4-hour. This is a bearish trend on a daily. So, we may find ourselves with some potential entries for some sales. You can see guys are playing around now. We broke below. Oh, yeah. Oh, yeah. Oh, yeah. So now it's below officially on a 1-hour. Oh, yeah. So it's playing around. Okay. What I'm looking at is he's got 1, 2, 3, boom. This huge break. And then now we're revisiting it and we're right below. But we want to look at some price action to make sure that we are where we want to be, preferably when it comes to the breakout below. All right, so you might want to see a retest. You have a breakout, you want to see a retest, and then enter. Okay, breakout, retest, enter. All right, that's the Euro Audi. All right, so let's just move along. Some of our favorites. Let's go ahead and go to our Audi dollar. Let's see what the Audi dollar is talking about today. All right, so we have a high. Let's see, we have our weekly here. We're on a downtrend, currently inside of an up, breaking above the 618 of this downtrend. So we may be looking for some reversals, and where we reversing to, we will reverse to this area right here where we have support. See, support 1, 2. Most recent. If you narrow down to our daily and we get down to the end, we can see we have resistance here 1, 2, 3, 4, 5. Okay. We also see that we have resistance here, which is being broken above right now. And as that being the case, this form of resistance, the support right here, this is support. Sorry, support levels. Support. This resistance is being broken above. Okay, and this is where the 618 tapped in reverse. The 618 from this trend, from this move here, from this high to this low, create this fib, and the fib shows that we are now breaking above the 618. So we may actually find ourselves wanting to push above. So we can possibly look for some entries, some bullish entries here on this chart. So you can see the price action occurring right now, doing a little loop above, reversing back to this level, which is the top of this here. However, still below supports here, 1, 2, 3. So this is a zone that has to be broken out of. We're going to have to mark this. I think it's just wise to mark this zone completely, and we want to see a full break above this zone right here, because this zone is going to incorporate what we see here, 1, 2, 3. Now let's see how large of a zone it actually is, and if it's a 50 pip zone, kind of quite large. Okay, let's go ahead and take that down a little bit. Maybe that's a little bit better. Give ourselves about 20 pip zone that we're dealing with. 22 pips, I could live with that. It looks good though. So now we can see we're playing inside of this. We get a break above and retest, boom. However, if this plays around and comes below, it was a fake out, and we need to continue going into our bearish pressure. All right, so let's go ahead and mark down below here for some alerts down here. Boop, 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 boop. Bye. And then you take care of that, bye. And if so, we get a break above here, we're gonna go ahead and keep an eye on that too. All right, so we got some charts marked up, y'all. I hope you guys are following along, getting some value out of this. We're just moving quickly along because I don't want to take up too much of your time. I want to keep it, I think I did start somewhere around 10:30. We are around 11:22 right now, magic numbers. So let's get in, just tighten it up and keep this thing moving. Okay, so we can see choppy market. I'm really not interested right now in this pound yen. Choppy. Not so choppy here though. Not so choppy here. Alright, so you know what we do. We go ahead and we just go in there. We just go ahead and knock these out. Boom, 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 boom. We don't need them anymore. Boom, 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 boom. Like my man Westside may say. Alright. All them boys, shout out to the Griselda boys. Alright, so here we go. On a daily, We're gonna mark out this. Once we just need to break out of these areas here. Let's get out of these areas here, and then we could be talking about something. All right, so that's simple, quick, easy maths. Quick, easy maths. That maths adds up to me. Boom, boom. Right, so we got the breaks. We got a break below here. All right, then we continue on. So we go here, right here. We just gonna set out a little. Boom, 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 boom. Perfect. All right. And then we go ahead and we just go here. We start getting some plays around this area here. We keep an eye on that. Break above, break below, we good. That's on the daily. That's what we're looking at, all right? We playing inside of the zone. I'm sure on the 4 hour it looks like a much larger picture. As far as this is the 8 hour, you can see how we're playing in the zone. We come touch below, touch above, touch below. You may want to come below and start hitting towards these areas right here. But we'll just let that play out. So I'm actually gonna end on this last chart right here, the dollar CAD. You can just go ahead and do the same thing on your other charts. I don't know if you guys trade the Euro CAD, the pound Audi, and these different charts here. Of course. All right, so I'll do the dollar CAD and I'll do the pound dollar. All right, these other guys you guys can take a look at. If you trade those, right? But candlesticks to candlesticks, again, you guys could use these same methods on any candlestick chart. It really does not matter. All right. So what we see here on the weekly, we're here on the dollar CAD. Here's a potential area for reversal. We're going to mark that here in black. Okay. And then we have our low on the weekly that we need to. Most significant low here on the weekly. We're going to mark that in a dark red. And there's a gap that needs to be filled here beyond this, right? So this is an area that needs to be considered as well. So I'll actually put another black line right here just to show that this gap has to be filled. All gaps get filled, guys. All gaps get filled at some point in time. I mean, all this space gets filled by something, right? From the very bottom of this candle, from the very bottom of this screen here to the very top of this screen here, we're gonna find, that there is some price that hit it at some point, right? So these are definitely gonna get filled. It's maybe some more sooner than later. It just depends, all right? So here's what we have. We have those two levels. I don't need this. I don't know where these came from. Let's get rid of that. They go here before, right? Get rid of that. Go ahead and put that up there, and that puts us at our high. The dark blue is what we need to be looking at for that there. Boom, boom, boom. And here is, technically, this is not a support yet because we have this candle here. It may show up as a support on the daily. All right, so that shows up as a support right here on the daily. So we just signify that with putting a bearish horizontal trend there. And then we also just want to tighten this up a little bit. I'm going to put one here, and then I'm going to go up and get the other one knocked out here. All right, so that puts us inside of this small zone right here. Breaks above, gets us closer to this point here. Breaks below, gets us to this reversal point, where we may also play a little bit more. Very, very tight right there, guys. I don't really see, as far as some of the charts that we've been looking at, so you have some of this ranging markets right now. It's in the middle of the zone right now. I'm not playing around with that. All right, some of the charts that we've looked at so far are giving us a little bit better entries, especially the ones that we actually placed alerts on, or maybe giving us a little bit of a better shot. This here we are on the pound dollar. We're just moving right along, guys. Pound dollar. Here's a weekly chart. Okay, we are in a general downtrend. Okay, on inside of the pound. And if we look at the daily, we are currently inside of a retracement move on an uptrend. So let's just keep that in mind. Okay. When it comes to these, charts, you determine what trend are you in. Use the larger charts to tell you, and you can see confirmation on the smaller charts. However, sometimes the larger charts are going to give you different things because you might, like you see, we're in a V pattern right now when it comes to the daily. So you might not, know, right? Again, what the major move is that you're coming off of. The major move still holds more significance because The retracement off of that is maybe only just a retracement and not necessarily a reversal in general trend. So you want to be careful. We're downtrend. You have this pull, right? But from here you have a high, you have low, then you have a lower high, and now you're pushing to a lower low. So as you're moving in this uptrend, maybe just to be able to create a lower high to continue to push down. So just keep that in mind. Use the charts to let you know what's really going on. And that's what we see on the weekly. And as we go on to the daily, you can see we have our lows marked here, we have our highs marked here. Here's an area for reversal. We need to keep that in mind because this area has been tested a couple of times, and huge pullbacks off of the zone. So we have to keep that in mind. So we're definitely going to mark that as a reversal area here. We're going to tighten that up right now. That still kind of incorporates that there too. So we can kind of make this a one-shot deal just by throwing in that and throw a little bit of sauce in there for them. Boom, boom, boom. Boom. Just like that. All right, potential area to go to continue to push forward, right? You have a low, a high, you have a higher low, a higher high, a higher low, maybe pushing for a higher high. This higher high creates a lower high based on this downtrend to continue to push it south. You see how that happens? It's a higher high inside of this mini trend, a lower high inside of the greater trend, okay? Keep that in mind, guys. Potential area for reversal. It may just be trying to peak up to push, or even just want to reverse off one of these moving averages, or a high that we have right here off of this resistance level. So you just want to keep that in mind. Is this something that I want to play around with right now? I'm waiting for breakouts, guys. I'm waiting for breakouts above here. I'm waiting for breakouts below here. I'm just setting a basic little alert. 1 and 1. Because I'm not wasting my time with these. There's so much other potential in a lot of other charts that it just makes sense to take a look at what we can do. All right, so we're getting some pullback off of this here. You can see that we have some opening closes, and we came into profit a couple of times, but it's just pulling off of it. I'm gonna let this play out because we have seen, we're getting a lot of wickage going on with a lot of these candles here on the euro dollar lately. So I'm just gonna kind of play this one out and see what we can do. It might want to come back up for a retest, potentially. We don't know. But right now it's wicking not in our favor. However, these candles are still closing out as bearish candles. It'll mean a little bit more to me as far as reversals going back bullish if these candles are closing out bullish with these bearish wicks right here. Excuse me, these bullish wicks. Right, this is a bullish wick. All right. Those wicks would signify to me if you had a bullish candle that we are really trying to push to continue going bullish. So I'm gonna keep an eye on that there. And if we get maybe a break below this lower, this low that it just got to, then it'll make me a little happy. But I ain't gonna stress myself out over it. So we just gotta just put that one, just like that. All right. So once again, y'all, it's been another episode of @TrepLifeFX. Check us out on Instagram, YouTube, Facebook, everywhere you can find us on social media @TrepLifeX. Coming soon. Got the website getting built out, membership site. Most of the information that we'll be giving out is free information, y'all. I'm really not trying to go into this whole thing where I'm just trying to charge people a whole bunch of money for some of the knowledge that I've gained over the years. Now, yes, I've consolidated a lot of this knowledge over the last 10 years of me being exposed to these markets, all right? I've learned from master traders. I've traveled. I've spent weeks in St. Louis with a master trader in St. Louis when I first got started, and I continued to study under this master trader and continue to push me along this journey in Forex. So I think I do have some things to share, and in fact, I'm willing to share those things for free, make myself available to those of you who are willing to undergo learning how to trade profitably in Forex. Now, the free information that I'll be giving you is most likely information that's going to be free, accessible anywhere else. If you want to pay me for my time is a lot more valuable. Okay, so obviously there's a fee to one-on-one sessions with me. There's a fee to me coaching and actually me holding your hand through the process. But if you are interested in that, obviously you can reach out to me @TrepLifeAce. We do Forex, we do social media advertising, digital marketing, e-commerce, affiliate marketing, credit repair. We're entrepreneurs. We live the Trep life. We solve problems for profit. That's what we do. People who have problems with their credit, we help them solve that problem for a profit. People who have problems with retail stores and making sales online, we help them solve a problem. When we're when we are selling a product, the product that we're selling is solving a problem for the customer who's buying it. That's what we do all day, every day. Trep life, best life. That's what we're all about. So if there's anything regarding being entrepreneurs online in the digital space, Trep Life is going to do our best to cover it. Especially from my experience, I've been involved in e-commerce, affiliate marketing, real estate, and now I'm expanding into the vending business. I'm involved in media duplication. I've been trepping all my life. Yeah, it's 20 plus years of trepping since I was a teenager. All right, so that's what it's all about. So stay tuned, y'all. At Trep Life Ace, follow me, TREPLIFEACE, and I'll check y'all out. Everybody have a safe day trading today. Stay safe out there in the market. Tomorrow we'll revisit and see what happened here. I'm hoping that this thing doesn't just decide to sit on top of this resistance level right here and then decide to just take off and continue going bullish. I just wanted to see a little bit push. So let's just see what happens. Right now, we don't have our moving averages in our favor on the 1 hour. However, they are in our favor on the 4 hour. We did take this trade on the 4 hour chart. We took this trade based on this pattern, this candlestick pattern here, that we are below reversal levels here. We are currently below trend, and we are in a general downtrend. All right, so that's 4 confirmations that were in our favor. That's what we're looking at. Taking advantage of right now when it comes to this trade. So let's just see how this thing plays. We are teetering around, even right now, breaking even. The most we've been down was about 2 pips. The most we've been up was about 2 pips. So, I think like $20 on either side. So it is what it is. All right. So let's just keep it moving, y'all. Happy trading, y'all. Enjoy your week. Stay safe out there.